anyone who has attended for those 3 days so far. You haven't missed a day. If you haven't missed a day, please raise your hand. Please, can we give them a resounding applause? Everyone who hasn't missed a day, whether virtually or, in fact, I think you should stand up. Please, let them stand up for recognition. If you haven't missed a day, please stand up. And let's make our ovation louder, whether offline or online. If you haven't missed a day, wow, wow. Please let the ovation be louder as we celebrate them. Thank you. Well, thank you. Please have your seat, ladies and gentlemen. If you've missed a day or two, okay, let's do this. If you've missed only one day, please stand up. Let's celebrate you too. If you've missed only one day, that means you've attended 2/3. I think 2/3 is a good pass mark. If you've attended 2/3, please let's stand up. Anyone, 2/3? Please stand up. Thank you. Let's celebrate them. Okay. Okay, so for those of people who are in here physically or virtually, at least I know you've attended one day. We'll do this. Perhaps tomorrow, if you come again, we'll celebrate you for 2/4. 2/4 is good, right? All right. Ladies and gentlemen, my name is Temi Badru, and it's such an honor to be hosting the Nigeria Fintech Week 2022. We're set for conversations that promise to be enlightening, and where together we can create solutions to challenges that affect the fintech ecosystem. Now, I'd like to begin by quickly giving us the Wi-Fi details. People would like to join in, connect to the Wi-Fi here. The username is Fintech, Fintech caps. If you put on your Wi-Fi, you'll find the internet Fintech in caps. Now, the password is Fintech at 2022. The at is the symbol for at, not a 2022. Please note that the F is capital, F in caps. So the password is Fintech at 2022. So please go ahead and connect to the Wi-Fi. And to those who are joining us virtually, you remain an important part of this conversation. So please, wherever you are, at home, at the office, in transit, in a cafe, wherever you're joining in from, please connect with us by sending us a message in the chat room. Just drop a message telling us your name, your location, your occupation, and of course, your firm or organization. In the course of this conference, I will come up here and read some comments from the virtual audience, just like I did yesterday. So sit back, relax, and enjoy. Now we begin this morning with a Goodwill message. And this one is from the CEO of the Nigerian Exchange Group, Oscar Onyema. He's represented, the Group CEO of the Nigerian Exchange Group PLC, Oscar Onyema, is represented today by the Chief Digital Officer, Dr. Femi Oyenuga. Please, a round of applause for Dr. Femi Oyenuga as he brings a Goodwill message from the Group CEO. Let's make our applause louder. And our online audience, please, drop the applause emoji in the chat room. You're welcome, sir.
Thank you very much. Thank you very much, Timmy. Good to see everyone. Some of us are not morning persons, but it's good anyway. So, Fintech 07. The interesting thing is that I bring greetings from Oscar Onyema, the Group Chief Executive Officer of the Exchange. Interestingly, I wear two hats standing on this stage. I'm a member of the GovCo of Fintech NGR, and also a barometer checker for the economy of Nigeria by extension of working in exchange. So I think I deserve a round of applause for that anyway. So the interesting thing is that we've actually crossed chasms over these last 7 years with Fintech conference yearly. And even when we had COVID, there was actually a virtual version of the Fintech. Now it's interesting that COVID has now transformed or cadenced into an hybrid version where you have people working from home and folks physically present as well. So your presence here is not taken for granted. You should celebrate yourself by giving yourself a round of applause. We are live, seeing Nigeria move to the next phase as a pivot. And so the message is very simple. Let's stay sharp, stay focused, and stay interested in what's happening within the fintech world. We see the different movements of digital infrastructure within the economy. We see what's happening with Fintech ecosystem, collaborating with the financial world and RegTech as well. We see sustainability as a kind of purity on it. And then we see the youth that are actually taking the entire technology that drives Fintech into the next level. Things around blockchain, things around cryptography, things that actually talks to how we evolve into the future. So it's not lost on us to drive an international conference like this. I'm actually yearning and eager to listen to some unicorns in the room. So I have InterSwitch and Opay. They're going to give us some interesting delights that will wow us and increase our level of curiosity and knowledge as we begin to see how this evolve. But to wrap up, when an economy does very well, it stems from the capital market. Some of the things we're trying to do is drive liquidity in this organization called Nigeria, and as it extends across the borders of Africa. So there's a lot of cross-border investment opportunities that we're looking at. There's a lot of digital asset, strategic aspiration that the country is looking at. There's a lot of digital transformational projects that the country is looking at. Wouldn't it be very nice for us to just pick our phones and buy stocks and shares and equities from the comforts of our room? Those are some of the big aspirational people that the country is actually looking at. We cannot do this alone without the ecosystem of fintech. Now, it is interesting to know that this year alone, person-to-person transaction in the country was over 300 trillion. That's one-on-one. And only 1% of that came into the capital markets. Now, what we're trying to do is that how do we extend that to ensure that what we're building from the capital market resonates where the country is going and we can become a profitable nation. In all, this is going to be a very interesting third day for fintech. The Goodwill message is that let's stay sharp, let's stay focused, and let's stay connected. Thank you very much.
Thank you very much, sir. Ladies and gentlemen, we're now moving on to the first keynote, but just some quick announcement before we go on to the keynote. I'd like to remind everyone who is joining in physically that we've got an exhibition booth just at the back of this stage. So please, if you haven't taken a tour around the exhibition booth, please go around to see some of our exhibitors. Also, we have a medical center where you can just, check your vitals, at no cost. So please go around. And then there's the gaming center. This is a lot of talking and a lot of insightful sessions. Or you might want to just play some games, relax and network at some point. The gaming center is also available. So please be sure to check out the gaming center, the exhibition booth, and also the medical center. Now, I came up yesterday with an incentive because we all like incentives. So I came up with an incentive yesterday to celebrate everyone who works with every speaker, every panelist, everyone, every pitcher, or everybody who makes a pitch rather, just to celebrate them for working with the allotted time. And the incentive was that anyone who works with the allotted time will be given a standing ovation. I think that may work today. What do you think? You think it will work? Okay, so there's a timer just at the back, and our speakers are going to be looking to the timer, and everyone who keeps to time and works within time, please, apart from celebrating them with a clap, everybody gets a round of applause. But apart from that, I'd like us to stand up and give them an ovation if they keep to time. Can we please do that? Okay, I think this will be a great incentive to be sure that we all work with time. Now, ladies and gentlemen, moving on to the keynote, The keynote is focused on emerging payment landscape and opportunities. Emerging payment landscape and opportunities. And to take this keynote, the keynote speaker is Oluwadamilola Dawodu, AGM Billings and Payment at Soft Alliance. A round of applause for him as he makes his way to the stage for the keynote. Thank you. You're welcome, sir.
Good morning. Beautiful faces that I see here this morning. Thank you very much for gracing this occasion. Fintech has actually come to stay, and we all stand to benefit from what Fintech brings to us. So I'll be discussing emerging payment landscapes and opportunities. Of course, we've not just scratched the surface of what we can actually gain from Fintech. So I came up with this subtopic. I said it is building a powerful economy using Fintech data. I'll start with this quote from Bernard Coase. He said, torture the data and to confess to anything. If I don't know better, I would say Coase belongs to FSAS in Nigeria. So, causing all of this, so look at this landscape of players within the fintech industry that we have. And is there anyone in this room who does not have at least one of the solutions up here as an app on their phones today? There is virtually nobody in this room that doesn't have at least one of them. Now, going beyond that, there's virtually nobody in this environment today that has not done one form of transaction or the other. So you see, data is moving every day from one solution to the other. So I'm not even discussing the funds or the money that moves across. I'm talking about that data. Across digital payments, insurance, investments, mobile money agents, data moves across board every day. Either you're doing a transfer, I'm investing, or I've even used my POS, my ATM card at the POS point or the ATM machine. Now, this generates data that moves across. What have we done with that data that's moving across? Of course, most of us will give you that data in our systems in silos. Of course, we share some of them with the regulators and say, this is what is going on, because the demand for it, and we need to just send those transactions to them. Now, the clicker is not moving to the next page. Hello, can someone help me there, please? So moving forward, there are some achievements that we have gotten within the fintech industry today. And by achievements, I'm saying the things that we've been able to do well. A round of applause to everybody that actually played their part in the industry. Of course, we have the regulators guiding us on what we need to do and what we need not to do. If you agree with me, without the regulators in place and trying to actually ensure that we don't do things that go beyond what they are stipulated, would not be where we are today. We will have a lot of solutions out there that have gone beyond what we expect them to have done or not. We also have, success within the identity systems today. I remember while growing up, I had to actually speak to my father, and I asked him, why don't we go to the banks and get loans from the banks easily? And what he will tell you is that the banks don't know you. You can't just walk up to the bank today because you have an account with them and say, I want to get a loan, and they give you that loan based on the fact that you have an account with them. They need to be able to say that I know this man properly. He lives in so place. This is his net worth. This is what he does. It is better outside of the country because they actually know you more. So when I thought about it, that how or what can we do to totally ensure that we have that same kind of feedback and relationship with our bankers. And the only way we can do that is if we have that data that is tied to our identity. I'm able to put those two together and say that this person is who he says he is, and this is what is what. Finally, the systems that we have out there today can only come true because we have brilliant innovators. All the solutions out there are product of innovations from brilliant people. Round of applause to everybody that has really played their part in coming up with solutions in the different spheres of our life. We also have highly skilled resources that have been able to bring these innovations to life. It is something different to have an innovation, have an idea. It's another thing to actually get involved, get the job done, and make this product come to life eventually. Now, all of these three things are achievements that we've had over time, but we now need to leverage on these achievements, leverage them against the data that we have gathered over time, and and come up with what to discuss next. Now, according to Statista, this is a recent update from October 2022. Now, if you look at it closely, you see that digital payments and new banking are what is doing quite well within the industry today. We don't see anything around alternative financing or digital assets, which is an area or an emerging payment landscape that we need to look at. And how are we able to get there? It is by leveraging the data that I've collected against the identity of the people that are involved and create a kind of system that really ensures that eventually we're able to build the economy. Now, bring together fintech and all the data that we have, get the regulators involved to totally ensure that nothing goes out of place, get the banks involved to totally ensure that the funds are available to give to those who need them, and finally, identity system to actually identify every individual to be sure that nobody claims to be who they are not. So I want you to picture a scenario where I profile someone and say, give him Mr. A. He gets his BVN or his NIN or his passport number that is linked to everything around his identity. So I know where he lives. I know where he has traveled to. I know where he's coming from. I know where he's going to. I link that to his BVN. Of course, I have details of his bank transactions and history. Every solution out there has a form of KYC done. So I has actually tied that to the identity of the individual against their transactions. Let us leverage that fintech data to grow the economy. How are we able to do that? Of course, let's all come together as an ecosystem, not just individual solutions having their data in silos. Let us combine that data. Which technology are going to use? Of course, blockchain comes to mind, artificial intelligence comes to mind. Let us harness that data and let us build the economy together. Of course, processing data and making it available to the end users eventually to say that, okay, of course, this end user by meaning that we have more fintechs coming on board, more startups coming on board to actually harness that information to give out services and render structures to the general populace at the end of the day. A simple analogy is that I want to buy a house, for example, but I don't have cash down. Today, you meet with those providing mortgage facilities and they tell you that mortgage is going for about 18% interest per annum, and you have 2 years or 3 years to pay back, which is impossible for most people to actually get eyes to that. But with this coming together, we can actually say that I know this person, I've seen his transactions. Yes, I'm giving you a loan for a reduced loan interest to pay back in 20 years. Now, the benefits, like I've said, efficient credit systems, I have data that's available, comfort for investors, because they know that when they put their money in, they're able to recoup it in a short period of time. Reducing interest rate, of course, it actually grows the talent hub eventually, because more people will be involved to actually get solutions out there. We are leveraging newer technologies around cryptocurrency, around blockchain, artificial intelligence, and the likes to actually grow the hub within Nigeria today. Then finally, I will leave all with this, that where there is data smoke, then there is business fire. Data is out there. Let us leverage it. Let us grow the economy more. Let alternative financing be the way to go. Then finally, we are SoftPay. We are building a solution that will actually help the environment at the end of the day and everybody. We have a booth just within the hall. Please visit our booth to learn more about SoftPay. We also have a raffle happening today. So if you come around the booth, you drop your card, the raffle will go on and you stand a chance to win fantastic prizes. Thank you very much.
Much Oluwadamilola Dawodu. He spent 9 minutes 55 seconds, so he left us with 5 seconds. So in accordance with our terms, please can we give him a standing ovation and a round of applause? Thank you so much. 5 seconds. Thank you very much. Thank you. Please have your seat, ladies and gentlemen. Now I'd like to quickly mention to us our hashtag so that when you talk about this conference and the major takeaway from this conference, you can tag us on social media. So please tag us on Twitter at Fintech Week NG, on LinkedIn at Nigeria Fintech Week, at Facebook at Nigeria Fintech Week, and the hashtag to use across social media platforms is NFW 2022. So please note that somewhere. Hashtag NFW 2022. When you use the hashtag, we can easily find, repost, and track your mentions on social media. Now, Damilola mentioned in his presentation that fintech data is essential to building the Nigerian economy. And you just might want to tweet about that and say, quote the speaker, or write your own thoughts about it. So please, as the conference progresses, as you take pictures, as you listen into the speaker, or to the different speakers, panelists, and session, please be sure to write on social media so that we can take this conversation beyond Landmark, beyond Zoom, to the world, to the larger world. Thank you very much. Now it's time for product pitches. Yesterday, we had so many innovative products being pitched. We had a lot of them, same with Tuesday. And it's another opportunity to listen to a product pitch. Now, this one is focused on payment, and it's titled Powering Your Own Business with Faster Payment Options Using Switch IT. Now, to take this pitch, I'd like to invite Abimbola Riz, Group Head Financial Services and Utilities at eTransact. A round of applause as she makes her way to the stage for the presentation.
Good morning, everyone. It's good to see you. Thank you. It's actually called Switch It. We always have that to correct that. Today, I would first of all want to say thank you to everyone represented here for being a part of a sector that seeks to continuously grow our economy and put Nigeria on the forefront of payments in the world. And I would also say that I'm very excited to be here. eTransact is excited to be here. We are excited to introduce to you one of our products that we believe would serve you in several capacities. But before I start, I'd like to ask a question. Is it going? We are all familiar with this question. And it goes, is it ever a good idea to put all your eggs in one basket? You and I will disagree strongly because we've always been told that, and we know to spread our risk. But today we know that solutions, financial institutions, MNOs, and the likes rely on single service provision for transaction processing. And it goes against what we understand. It goes against what we believe. It goes against risk mitigations and all of that. An industry or a sector payment that is over 240 billion naira with impatient customers, sophisticated customers. You don't want to do that. You want to be able to serve without having recourse to explain yourself in any way. You want your customers to do business without having to ask questions. And eTransact saw a need that exists in the sector, and we are introducing Switch It, switching as a service. It's an API-based solution. It is a flexible, highly secured, highly well-hosted switching and transaction processing platform that seeks to validate, authorize, and process transactions across different channels. And I'll go into that as we progress. So what is SwitchIt? We talked about SwitchIt as being a technology that enables you to drive your transactions without stress, gives you options, opens up your options for transaction processing for your customers. Then, what can it do for you? We have several models. It's a modularized solution, so you don't have to embrace everything. It's what works for you that you pick up. So we have a mobile wallet white labeling solution where merchants, fintechs, banks can integrate to easily for transaction processing, for payment, enable channels and enable your mobile applications as the case will be. We have bulk payment solution where you have capabilities to do instant transfers to multiple accounts and wallets. SwitchIt will enable airtime vending for airtime vending services across all of your channels. It has a gateway that is highly scalable that would serve all of your recurrent requests on the platform, on all of your channels. We have remittances for B2B, B2C, C2G, and all that available using the SwitchIt application. You own your front end. Whatever you want to do with it, you own control. This is a back-end solution that will drive all of your businesses. Funds transfer is a major part of SwitchIt. Today we have interbank transactions that happen, and if for some reason it's unavailable, there is unavailability altogether. eTransact presents SwitchIt that will solve that problem for you, where your customers will continuously do their business without knowing that anything has happened. We have a billing platform that is a module of SwitchIt that enables bill payment. It is backed with hundreds of billing organizations that you can harness immediately for your channels and use to serve your customers. And of course, we generate revenue for your business. So why SwitchIt? There are 4 elements of SwitchIt that is important that we believe would serve the sector. First of all, it serves as a mitigant against one point of failure because it renders the same service and with higher availability. It gives you potential to increase your revenues across all of your channels. It has customized support service. You're a different bank, you're a fintech, you have differentiated services. One approach of support does not fix it all. We understand your business based on what you do and the customers you serve, and your support system that will back the solution that is given to you is customized to meet all of your business needs. So those are the 4 major value that SwitchIt brings to the table. But embedded in SwitchIt also are the concerns of the industry that we know, or the sector that we know today is a pain point. We have top transaction capacity. SwitchIt is able to deliver higher value and scalable throughput for your transactions. We had fraud protection for your transactions. You are sure that your transactions will go smoothly without any hitch because there's a fraud prevention and management system backed up in the SwitchIt platform. We have risk mitigation. All transactions that happen on SwitchIt are collateralized, and you're sure that value will be given to you as a service provider, whatever the situation is. Settlement. Available to SwitchIt is multiple settlement cycles, and it goes as far as giving you capacity to do same-day settlement for all of your transactions. You have a robust and real-time reporting platform that gives you access and gives you control over your transactions. Then because of all of these embedded together, there is the fund management aspect of it that gives you flexibility to manage funds for your transactions and hands over power to you. So who needs SwitchIt today? I have a list here, but to be honest, if you are a forward-thinking organization, You want to win in the marketplace. You are looking at how to differentiate, where we know today that services have become fungible. The way to win in the space, accelerate with speed and availability beyond putting out easily replicable products, then switch it is what you should be looking at. But I have a list here regardless. So we have commercial banks. We have a couple of them running on the platform already. Microfinance banks, mobile money operators, digital banks, PSBs, fintechs, and merchant aggregators, and every fintech that has one solution or differentiation that you want to bring to the marketplace. Yeah, so like I said, Switch It is not new, it's operational. It's not something that you've not seen that has not worked, it has worked. And we have recorded success rates. This is on the growth trajectory. eTransact as a pioneer switching company with interest and high capabilities is working continuously to grow the numbers to improve on service efficiency and availability. Right now, what we have is 95% success rate on funds transfer. Yes, you heard me, is 95% success rate on funds transfer. You have 98.8% success rate on airtime top-up and 99.5% on bills payment. To close, I would say that service in the fintech space is about speed, reliability, comfort, and being able to meet your customers' expectations. If that is what you're looking at, and that is what you're looking for, contact us. Thank you.
Thank you very much, Abimbola. So she spent 10 minutes, but she didn't go further. She didn't exceed the time. So I think she's deserving of a round of applause. She didn't give us any extras to take home. Yes, an ovation, please. So she was right on time. Think Switch It. Thank you so much. Now, ladies and gentlemen, we're moving on now to the next session, which is the keynote on sustainable impact in fintech, e-government, and emerging technologies. And I'm really honored to invite for this keynote the MD InterSwitch Pure Pay, the MD at InterSwitch Pure Pay. Ladies and gentlemen, with a resounding applause, please make welcome Akim Lawal.
Good morning. Thank you. Okay, let's try this one. Good morning. I'm really pleased to be here. I think the very first thing to say is just to congratulate the Fintech Association of Nigeria for another amazing conference. This is it's been a fantastic 3 days so far. But again, just to kind of acknowledge the fact that what this platform creates is an opportunity for partnerships, for innovation, for industry thought leadership. And so far over the 3 days, I think we've had some really amazing conversations. Congratulations to the Fintech Nigeria team and to the Nigerian Fintech Week. This morning, I want to talk about, in just about 10 minutes, some of the sustainable impacts, right, along the theme for the conference this year, looking at fintechs, e-governments, and emerging technologies. And to start, I'm going to take us a little bit down memory lane. Okay, so I'm going to start by taking us a little bit down memory lane. I'm going to look at what have been the impacts of fintech and the emerging technologies that have been introduced into the market over the last 20 years, right? We'll be looking at the impacts in terms of financial impact. I'll be looking at it in terms of social impact, economic impact, and then talk about how well have we done from an environmental and also from a developmental perspective. Then I'm going to challenge us, right, to look at what are the current trends that are happening and how well are we living to the tenets of building sustainability into the businesses that we do, into the approaches that we take to business, and into how we engage with our environment and our communities, and indeed, in terms of building the sustainability that will create value over the next 20 years, right? And I'm going to end up with a charge to each and every one of us. Awesome. 20 years ago, right, there were less than 10 companies in the fintech space, right? And amongst all of them, I think they had received investment somewhere in the region of $5 million in Naira terms at that time. 20 years later, we have over 250 fintechs, right? And in just the last year, alone, about 96 of them received investments of just over $400 million, right? Now, if you take all the 250 fintechs together, I think the value that has been created in terms of investment or value that these companies contributed to the Nigerian economy, the total value of all of the companies, I'm estimating at almost $8 billion, right? In terms of value that has been created by organizations that have created businesses over the last 20 years. 20 years ago, the number of jobs that has been created, or should I say livelihoods impacted, I would say is less than 200, right? 200 staff and entities who were working for tech or fintech related companies at the time. If you look at what's happened today, right, as at today, I think the fintech companies kind of employ in excess of 20,000 people, but that's nowhere near the number of lives or livelihoods that have been impacted. We are estimating that more than 2 million livelihoods have been impacted. And amongst those numbers will be all of the agents who now have an opportunity to create value and wealth that they can use to support their families, includes those who've been enabled to take their e-commerce or internet businesses on Instagram and create value and for their families as well, right? Again, 20 years ago, the businesses were serving only about 150,000 customers, but today, amongst all the fintechs, I think over 65 million customers are being served on an annual basis, right? How many businesses were impacted or served? These are companies who have received value from the fintechs themselves. Today, over 530,000 companies, small, medium businesses, including large organizations, have been receiving value from these organizations. E-government didn't exist 20 years ago, but I'm aware of at least 270 e-government initiatives, digitization of government collections, government payments, across all the state governments, federal government parastatals, state government parastatals. And then just some thinking about the statistics in terms of volumes. But probably most important for me is where Nigeria is on the global map, right? 20 years ago, Nigeria was not seen as a tech nation. We're not recognized as anywhere in front of digital technology. We're seen specifically as a backward organization. 20 years later, we're now recognized globally as one of the top tech nations across the world, and not just in Africa. So that's what we've done. The question is, what are we going to do into the future, right? As a fintech business, and I know a number of you here are, most of our priorities are around what's our revenue, what's our valuation, how are we growing it, right? Should those be the only thoughts? Should we begin to think more about what kind of sustainable impact will we leave over the next 20 years, right? And I know there are a number of challenges, and the next panel is going to talk about some of those, right? When you look at, first of all, competition, right? The competitive environment has changed significantly, right? You have fintechs, you have neobanks, you have financial institutions, you have everyone who is playing, including big tech coming into the environment. The nature of the competition is becoming so intense, but should we be doing competition in a manner that we forget the ability to create sustainable businesses that will survive into the next 20 years? We've looked at business models as well. I mean, for the last few years, we've seen an acceleration of growth fueled by investments that have come into the market. As those investments begin to slow down because of the global economic environment, behaviors are changing in terms of business models, right? People are driving more towards creating sustainable businesses. Profitability is becoming a key concern. How are you doing that and still thinking about the next 20 years and building a business that will be sustainable into the future? What about talent? Probably number one of any business or CEO today, right? You're losing talent to competition, you're losing talent to migration. How are you refilling that talent pool, right? Most organizations are just trying to pay bigger salaries to attract the most competent talent. Should we be thinking about how do we refill the talent pool and rebuild the talent population so that we will have, again, sustainability as we go into the future in our businesses? What about the technologies that have been said will disrupt the future, right? I've picked two of them: big data and artificial intelligence, blockchain and crypto, right? Fantastic technologies, likely to transform almost every industry in which they will touch. But are we thinking about how those are going to be deployed locally or internationally? Are we going to be consumers of those technologies, or are we going to be producers, creating value for the continent and for the future generations of Nigerians and Africans? What are we doing to build the capabilities and the talents in Nigeria or in Africa that will build the solutions that will solve the problems that exist for us? Because again, like we've learned over the last 20 years, those solutions are not going to come from foreign organizations, they're going to come from us. And we will not get those solutions if we do not build the talent pool ourselves. What about the next 20 years? What are we going to do in terms of e-government? What kind of sustainable impacts are we going to create? What kind of sustainable impacts are we going to create for the environment, right? These are some of the questions that I think as we go into the sessions today, and I know there are two panels that are going to discuss sustainability, are really important questions and comments to ask. So my charge, which is my last slide really, is as we think about the next 20 years, right? Yes, we must think about financial impact. How do we create value for our investors? We must think about valuation, right? But we must also think about our social impact. We must also think about our economic impact. We must also think about developmental impact, right? And we must also think about the sustainability of our businesses as we go into the next 20 years. Thank you very much.
So if you look to the back, you see that it's right on time. So please, ladies and gentlemen, a standing ovation for Akeem Lawal, MD, InterSwitch Pure Pay. Round of applause for him. Thank you very much. So, I mean, from where I was sitting, I saw that what he did in his presentation in such a short time was to take us down memory lane to 20 years ago when there were just a few companies in the fintech space to where we are today, and then looking to the future. So thank you so much for such an efficient use of time, you know, to take us to the past, the present, and then as we navigate towards the future. As you rightly mentioned, ladies and gentlemen, we're moving into a panel discussion now that would focus on the challenges in Nigeria fintech ecosystem. So this panel is going to be focused on challenges in the Nigeria fintech ecosystem, and it's going to be one that is open for discussions, comments from the audience, whether you're joining in physically or you're joining in virtually. So please, if you have comments, if you have questions, please note them down now. Now is a good time to note them down. And also as the conference proceeds, as the panel discussion goes on, would like this panel to be very interactive. Now, we're going to be looking at challenges in the fintech ecosystem with a view to creating solutions. So we are co-creating solutions, and we want you to be a part of it. So please, I enjoin you to sit back, relax, and be involved in this panel discussion. Same goes for our virtual audience who are joining in virtually using the comment box on the Zoom application. Please drop in your questions, your comments as the session progresses. Now to the panelists and the moderator. Now this panel, as I mentioned, is focused on Fintech Industry Forum. It's a Fintech Industry Forum that's going to be looking at a dissection of challenges in the ecosystem. And the first panelist I'd like to invite is Deremi Atonda, MD Remita. A round of applause for Deremi Atonda. Thank you. We've got Kofo Arowolo, MD Woven Finance. A round of applause. We've got Oluwakomu, CEO Opay. Please, a round of applause. Thank you. You're welcome. We've also got Ajibade Laolu Adewale, Group Head Partnerships, Digital Solutions and Fintech at Wema Bank. A round of applause. Joining us virtually, we have Aitwa Scholar Oladejo, Executive Director at FSI. A round of applause. Now, to moderate this panel, I'd like to hand over the microphone to Inchedolisa. She's the Associate Manager of Fintech at Steer Business. I'm talking about Inchedolisa Anama. A round of applause for her as I hand over this baton to her to moderate this conversation.
This is working? Sorry, is this working? Can you hear me well from the back? All right, thank you. My name is Inchedolisa, like was introduced as, and I work at Steers Business. I work at Steers. Some of you may or may not know too much about Steers, but Steers is a data intelligence startup, and we're all about solving the information problem in Africa, like the first speaker was talking about. So before I go ahead, I think there's something that struck me walking into the room, and I do want to just mention it and say a big shout out to the Fintech NGR crew. And I think once I saw that there was someone doing signing, the first thing that hit me was that, wow, you guys not only talk inclusion, but you're actually walking the walk. So congratulations, and that was really remarkable. All right, so we have an interesting job today in that our focus today is the way we're going to know that we've done a good job and we've had a good conversation is being able to dissect the challenges within our very dynamic ecosystem. So my job as a fintech, as overseeing the fintech practice, is really to be a cheerleader for this industry. But I think one thing that I want to know that we did very well today is leave people not just with solutions, but a better ways to think about the actual problems. I'm not hoping for the solutions to come out of this room or this conversation, but I'm hoping that if we change the way you think about the problems, maybe perhaps, we can get closer to finding some solutions. So there are going to be three major problem areas that we're going to talk through. We're going to talk about the challenges with scaling as a fintech, getting closer to moving away from just pure revenue to profitability. We're going to talk about the battle for talent. And then lastly, we're going to talk about things around corporate governance, given all that we're seeing on social media and all of that. But to start off, we're talking about scaling. I'd love for us to take a look at basically, when we think about scaling, I like to think about scaling on two sides, scaling your customers and then scaling your supply. So to start us off today, I wanted to throw a question open. To Mr. Jibadi, I'd love to ask a question around when we think about growing your customer base. The other day, something dropped in my mailbox. It was like a report from McKinsey. And you get all these reports and you tell yourself you read it, you never get around to, but among the first few lines, one of the things I picked up on was, there was a stat that said that in Africa, African consumers, if you compare them to maybe consumers in Latin America, it's about 4 times harder to monetize an African consumer. And then if you do the comparison with the consumer in the European Union, it's about 13 times harder to monetize an African consumer. The natural answers to this question is, oh, Africans have smaller pockets, right? And so the first question I wanted to ask is it just about small pockets? Mr. Ajibade, is it just about small pockets? What else are what are the other factors that may likely be causing it to be so hard to monetize an African consumer?
Hello. Thank you, Lisa. Well, I don't know where you got that statistics from, and it can appear to be correct, because most times when we are trying to digitize a journey or find solutions to problems, we don't look for find solutions. We don't look for the problems, but for where, and that's to speak to some of the challenges of fintech. Everybody is going into a very saturated market. When the other speaker, when Damilola from SoftPay was talking, he spoke about the other opportunities, and he showed a graph of what has been done, payments and digital bank, digital payment and new banks have actually scaled. And it seems that that's where everybody is focusing on. But there are some emerging technologies that we can look at and see how we can solve the problems there. There's a small company called, maybe I should hide their names. Their focus is on transportation and trying to solve the problems of transportation, from when you board a vehicle to when you get to your destination, to when you pay the driver and when you get the fulfillment for the journey. So I think one of the problems that we have has been the problem of identifying what problems to be solved. And if you can solve that problem, we will see traction. So I agree with you, but it's in the sense that we probably will not solving the problems that should be solved. There are problems around insurance or capital market. When the other gentleman who represented the DG of security was talking, he mentioned the figures in terms of payment that has happened throughout the year, but just a percentage of it came into the capital market. Somebody should look at that and go and solve that problem, and then we see the traction we're looking for. Yeah, that will be all.
Thank you. Yeah, those are interesting comments, because like you pointed out, the map was very rightly showed there were so many verticals that were yet unexplored. And I think one of the quotes that he put up, which was interesting, has something to do with smoke and fire. And it's true that there's no smoke without fire. And so the question is, and I'm gonna just throw it up open for whoever wants to take the first stab at this, is we have acknowledged that mostly a lot of the innovation within payments is really largely concentrated. A lot of the innovation within fintech, I should say rather, is really very concentrated within very few verticals, payments being the top one of them. And we'd like to know that. I'm sure it's not just a lack of acknowledgement that there are other verticals to explore. So what is it actually? What are some of the factors that may be limiting people wanting to innovate in other fintech verticals and just having so many people doing so much in payments alone? I don't know if there's anyone in particular that wants to go at this one.
Okay, so can I respond to that?
I can take this. Hello. I think we need to talk about context first, right? When we look at Nigeria, we have a population of about 440 million. Africa is about 1.3 trillion. So Nigeria is about 20% of Africa. So it is a viable market. When we look at the revenue that can be derived, which is through the consumers, you alluded to the fact that in Nigeria, the personal expenditure consumption, or across Africa, is about 1,500. In Latin America, it's about 5,000. And in Northern America, it's about 49,000. So what we see there is disposable income and the revenue that can be derived from Africa. And then you distill it down to Nigeria, there's a challenge there. What that means is that we need to be very, very focused about creating value-based products. Ajibade alluded to that, right? There's the fintech industry, there's payments, which is arguably saturated, but there's still a lot of value to be derived because there's still friction in this market. But beyond payments, there's obviously lendtechs, redtechs, insurtechs, crypto, and the likes. The thing is, it is still a nascent industry. So what that means is somebody has to do a lot of the heavy lifting. When you see other people in the market that have tapped in and identified an opportunity and demonstrated that there's value to be derived, it makes it easier for other people to to enter that market. But naturally, if someone is going to enter this greenfield terrain, that means there's a lot of work that needs to be done to derive value. And it's not always first mover's advantage to win. Sometimes you can learn from that first mover and the second mover can win based on the knowledge derived from that first mover. So in a nutshell, data is a problem in Nigeria as well. So being that first mover to take that high level of risk, it requires a level of comfort and it requires the necessary, capital funding as well. Some of that is being solved by some foreign firms that have tapped into some value and see that that can also be distilled into the Nigerian market. But of course, it's up to us to support ourselves, local funding, to invest in these smaller fintechs that are tapping into some problems that needs to be solved in Nigeria in moving us forward as a country.
I think a good summary of that would essentially be, hey, even within the payment space that looks saturated, there's still so much more value. And we can tell that because there's still so much more friction even within payments itself.
Absolutely. I mean, according to McKinsey, I think in 2020, the fintech revenue industry was about 4 to 6 billion. And by 2025, it will be 30 billion. So that just sort of shows the value and the potential that, we have across Africa.
And so I think just to write off of what Kofo just rightly said, the question then comes is, even as there's value still within payments that we've not yet tapped into, but concentration does have implications for profitability nonetheless, right? And so that's another, I'm voicing this out as a thought, so that's another issue that fintechs are gonna think about, like profitability, as we get even though we're tapping more value, but we're getting increasingly concentrated, and so it's hitting your impact on profitability. So that's a thought I'm gonna come back to, but I did wanna make sure that if there was additional comments on this question, I don't wanna.
Yeah, thank you, Chair. Just picking up from the last two contributions, to start from there, I think the first thing in terms of solving the problem of scaling and profitability, one of the big issues, I want to echo a tweet of one of our fintech gentlemen, Charles Dairo. One tweet some weeks back, he said something like, is your product a painkiller or a vitamin? I think it's a very perfect analogy. If your product is a vitamin, a nice to have, when you're not solving a really big problem, it's unlikely that you are going to scale. If you are solving a really big problem in terms of a painkiller, that's the foundation of scaling and perhaps even the challenge of long-term profitability. But speaking to a couple of the issues around the profitability of the African consumer, why is it could be a particular challenge, for example, in Nigeria. The first thing from our business at OPE, is I feel like the cost of access. In an offline business, that's a major component of our business, for example, where we deploy POS terminals. These are dollar-based costs. A POS terminal at $60, $70 implies that if all the merchant acquiring solutions in Nigeria are going to be strictly based on this kind of $60, $70 solution, it will limit the kind of addressable market we can reach in terms of profitability for all of us who are involved in merchant acquiring. So if we're going to solve and scale the merchant acquiring business in Nigeria market, how do we get the MSMEs where the cost of acquisition, the cost of access to those markets are much lower in tandem with the kind of revenue opportunities of those kind of MSME, for example. The second thing, of course, is infrastructure and ecosystem. Our e-commerce players have learned the hard way that they have to do logistics along with their business. These are additional costs. If they were running, for example, in Europe, they would not have had to do such investment. Infrastructure costs also in terms of payments on our business, we've seen in terms of things like higher KYC, higher compliance, and higher risk management costs. In a country where only 40% or 30% of our people have formal digital identity. Digital identity is the foundation stack for credible and trustworthy payments. When we do not have it, it means KYC cost, compliance cost, risk management costs are much higher here compared to Europe. The other things are things like the geographic disparity of Nigeria. Lagos is not Nigeria. The ecosystem complements that you have in Lagos is not what you have up country. So as you move out of Lagos, the cost of some of the things you want to do, business cost of acquisition begins to get higher. The other thing, particularly for, and speaking to, we know a lot of people are online, addressing the mindset and the dichotomy that valuation and profitability are mutually exclusive. If there is a lesson we should learn over the last 1 year, particularly, is that building a path to profitability, even when we are building valuation and scale, getting our unit economics right at customer level and at product level is very fundamental into building a valuation that will last and be sustainable. These are some of the things, those kind of mindset issues that I just want to acquire and scale. Scaling for what? Is there a path to profit in the business that you are scaling for? I think those are some of the issues that we should, that touches on profitability and scaling, for example, in terms of peculiar issues in our local ecosystem in Nigeria. Thank you.
Thank you. Thank you so much for what you've shared.
Maybe if I could just quickly add to that, and taking on from where Olu stopped, the opportunities are endless, but it's address the issues around why aren't we going for those opportunities? The environment of risk, that's one. You want to be in safe harbors and do what others have done, but like you said, concentration therefore challenges profitability. But the honest truth is the opportunities here are still elastic, like Ofo said. Just think about it, Okada business, right? As concentrated as you think it is, what they're pushing for is the last mile consistently. Bring that into payment. You begin to see that there are many things you can do around that. And just from ferrying people, they ferry goods, they become courier companies. The same thing happens once you're talking about the flow of funds. You just see that so many things around it. So talking about scaling, the first thing is the mindset with which you start off. Then awareness of your environment and the opportunities. One thing we've seen recently is, since we're talking about the industry, we need to be responsible for ourselves and to ourselves. And kudos to the guys who championed the startup bill, because that's about recognizing this environment. And so we need to do a lot more for ourselves. Collaboration is the next thing. Olu just mentioned the cost of acquiring devices, $60, $70. Think about that value chain. And if everyone in there is going to be a part of putting a system in place where you have someone who's producing that right here, even if you're taking $5 off it, everybody benefits. So the issue about profit, keep trying to reduce costs, but then you talk about the environment of increasing inflation. And that's another thing we need to speak to. For too long, everybody keeps looking at the cost of transactions without looking at the cost of making transactions happen. So while the cost in the operating environment is going up, everybody keeps saying transactions should be free. Sitting on what environment? So I think we need to speak to that as well, since we're speaking for the industry. So advocacy is a platform that must bind us to speak to common issues, to look to extending opportunities. You can't grab it all. And that's one of the things we're beginning to do. Ecosystem play is going to continue to be critical. Ecosystem play, you see an opportunity, you want to sit on it alone, the cost of doing it alone can be very massive. Then you want to reinvent the wheel. What someone has done, you want to reproduce that. You're not creating value. Why don't you leverage on what someone has done? And that's ecosystem play. And now we're all in the API game. If someone is already doing it and you plug in, the costs are going to get lower. Everybody benefits. Margins can grow up without actually pulling environmental levers. And when I talk about looking at the value chain and what you can do, just think about data. You were quoting McKinsey. Who's the authority for fintech data in Nigeria? Stays, right? I don't know, I'm just joking. But just think about it. And Olu had also alluded to that about data. One of the things we did, you're in payments, what are people getting paid for? And you mentioned credit, access to credit, digital identity. Everybody forgets that every footprint of salary payment is an identity for creditworthiness. And today, we've got about 50 people who provide financial services who are plugged into us. And the only thing they're looking at is the value of these people. How do they get paid? What do they get paid? And you begin to see the responsibility items because you already can map those within that ecosystem. So the cost of lending gets increasingly lower. A lot more people are going to get attracted to that. And that's about creating value. Thank you.
Thank you. These are all very valuable. These are all very valuable thoughts. I want to turn it over to Aitwas to get her input as well. But before I do that, I just want to do a quick recap because I think a lot of value has come from just a small part of our conversation. Yeah, just a small part of our conversation. One of the things that I'm taking away, and I think this is necessary for any fintech operator in the room, is some of the, when you're thinking about scaling, you have to think about how am I going to balance the cost of operating with the money that I'm going to get in. And Mr. Komu rightly, he listed out a list that I think was a quick rough checklist for me, which was, what are the things that can drive up your costs as a fintech? One of them is just building infrastructure, right? One of them is just getting access to data that you need to do your business, right? And then other things is just like geographical disparity. And the fact that a lot of the expenses we're making, because we're not an industrialized, we're not an economy that builds, that produces what it consumes, a lot of the expenses fintechs need to make are going to be dollar-based. And that's, but the example was the POS, and that's necessarily driving up your costs. And some of the solutions that actually came from what you shared, Mr. Was basically around collaboration can knock down the cost of how much you need to do, right? So getting out of that mindset of I must do it all. And then data was another thing that you echoed again. And so I want to come back to this talk of data because I'm very biased. Like you can't say data and have me keep quiet. So I want to come back to this cost of data. Like what is going on? Why do we have this gap for fintech? But I do want to turn it over to Aitwas to get her comments on this, and then I'll take it back to Mr. Ajibade.
All right, thank you very much. And a lot of interesting thoughts have been shared. However, I'd like to look at it from two perspectives. The first one is ecosystem development. I'm an advocate for ecosystem development, and I think that's what I've been doing in the last 3 years. A lot of things are happening in silos, and when that continues, the cost of service to the end user will still be very high. My personal experience, I couldn't get to an ATM. I hope you can hear me.
Yes, very well, loud and clear.
Okay. So I was in a location and there was no ATM and I needed cash to do that transaction. So I walked up to one of the POS agents and I tried to withdraw from that POS agent. And she said, how much do you want to withdraw? I said 20,000. I said 500 naira. Of course, that's what is obtainable today. I was taken aback. The cost of service is still very high. I think that there is room to create more innovative solutions. I don't think that for us to scale, POS is the only solution to withdraw cash apart from ATM, to transact, to do business. I think that there are services you can put in the hands of merchants that are lower than the cost of POS. We know that our economy is highly dependent on dollars, and so it keeps driving that cost up. We have an industry innovation sandbox today, and we see a lot of people come up with genuine ideas on how to drive payments. However, they need to collaborate with incumbents. And in collaborating with incumbents, some incumbents are selective in what they will collaborate with and what they will collaborate on. I think that if we have a system and a structure as an ecosystem, right, to harness these products or to harness these ideas and drive them across the value chain, there will be immense value. The second thing I will talk about is the willingness to pay. So you offer a service, and FINA's data, which most of us rely on in the financial service industry, have shown that some customers complain about costs, or they don't even have any form of income. And of course, if you don't have a form of income, there's no how you can even want to participate. The third thing I will talk about is what the MD of Open Finance mentioned, creating value. If you create something that resonates with my life, that resonates with my culture that resonates with my sentiments, something I cannot do without. Definitely, I would want to use that service. My willingness to pay is how you delight me and how much I can afford to pay for that service. These are some of the points I think that we need to be discussing. How do we democratize innovation, for instance? How do we make innovation in Nigeria second to none? How can we create a unified platform for early founders, for young startups to do stuff? These startups want to coexist with the incumbents. Yeah, they want to collaborate, but they also want to coexist. Coexist in the sense that they want to have their own identity. They don't want to be swallowed up. How do we create that kind of platform for this to thrive? And then some of these challenges around demand. The success story in FSI today is when we started, of course, we're trying to grow our community. Today, we have about 6,000 innovators in 3 years. What we did was to work with incumbent players. We worked with existing partners. For instance, we worked with a developer community, right? And the first events we had, our community grew from 100 to 1,000 plus. So that's one way to even scale in terms of services. So those are my few thoughts for now. Thank you.
Yeah, thank you, Aitwaz. I think one of the big summaries I take from that is basically one of the things, one of the challenges to scaling is not having enough ecosystem platforms where people are exchanging thoughts, also sharing stories and mistakes, and how we can collaborate to find better solutions and not repeat the same mistakes. Thank you so much for that, Aitwaz. I do want to give it over to you, Mr. Ajay, but I think you had a thought on this.
Thank you, Lisa. If you are following all the speakers, we have all said almost about the same thing. We understand the challenges, and I want to say congratulations to all the startups in this room, because last week, the federal government just passed into law the startup. It was the bill before, it's now the act. The Startup Act speaks to the challenges startups are facing, from government policies to regulatory bottleneck to high cost of doing business, access to funding. And then it addresses the gap between government and startup and their operating costs, distribution as well, infrastructure that Mr. Oluwakomo of OPE spoke to. So the Nigeria, we are moving in the right direction, that's what I want to say. And that same policy is now left for us to harness and drive it to ensure that it's working properly. What we have done in Wema Bank is to create a partnership desk that provides distribution, infrastructure, and wholesale banking to potential partners like startups. Now, the wholesale banking is not your typical retail banking or commercial banking or corporate banking. It is wholesale in terms of we understand your business and the cycle of your money. You are not a settlement bank, and then we are a bank, but we can avail to you some credit facility as such, not a credit facility, because we understand the cycle of your settlement scheme. So you can have access to your money even before your money comes in. And I think that's a step in the right direction.
Right. Thank you so much for that addition. I think one thing I want to pick back on and double back on is we've not listed a number of challenges to scaling, to increasing rapid customer growth as fintechs. One of the challenges I did want to drill down on is the challenge of data, and basically the challenge of not having available data in order to make your decisions, coming in newly into the ecosystem, or even sustain your business as an existing fintech. And so I do want to get thoughts from around the room is, what exactly, one of the questions you asked, it was a rhetorical question, was who's a standard in terms of standard industry provider of industry data now? It can either come from public, it can come from private. If you look at America, we have public services that provide data, and then you have private services that come in. Now we can't wait on public, we just can't, because fintechs need to grow. And so the question is that why isn't that second tier, that second option, why hasn't it materialized in terms of being the central bank for data for fintechs?
Well, I think that goes back to the issue of advocacy I mentioned earlier. As an industry, we must know the things that drive the industry, and we must go all out for them. And we're so fortunate that the central bank's disposition over the recent years has been one of openness. And so many times, all of us report transactional data. Nobody's processing, nobody's analyzing. And that's a value point, just talking about opportunities and extending them. So just imagine the number of fintechs who are getting to be regulated. All of us send data to the CBN, so what next? What next? Imagine someone steps in there and says, for the industry, we're going to be processing and analyzing this data. We talk about geographical distribution. Today in Nigeria, we know about the cost of fuel distribution and why we have what is called the bridging cost, if fuel is going to go to this part of the country. If you're going to extend financial services to some part of the country, what's the minimum cost? Who's going to interpret that? You can only see your own cost. So starting point, where are the data sets? Second thing, who's going to take responsibility? And I'm thinking as an industry, we can write that and agree amongst ourselves. We think this is important. In fact, we want to sponsor a startup to take that on because that becomes available to everybody. It's a data pool, it's big data, we're monitoring consumer behavior. Like I mentioned earlier, the kind of thing we're doing today is just amazing. There are people who have worked in different places for a number of years that still find it difficult to have access to credit. Why? Because their data is not digitalized. They still go to many places and they're asking for paper evidence. And you're just making this available on USSD to a swath of providers. So from transactional data to analysis of data to sharing of data, then that gives insight. And so that also says the collaboration is not just within us, within the industry, it also extends to government, to regulators, who are more than willing in recent times to accelerate this industry. So the ball is in our court.
I think one of the practical points you picked up is even established players sponsoring a new player to just focus on this problem of aggregating data across for fintechs. I think the very first conversation I had coming to this room, one of the things that was shared is like, the amount of fraud that happens today. The fact that we don't have a place where we can go and see that this number, this phone number, or this name, Paul, is someone who's known to have hopped between platforms, in order to be able to defraud them or to be able to try to get loans. We don't have a data bank that can tell a fintech that. And so that's useful. Before I continue, I did want to ask, is there anyone in the audience at this point in time that has a question, like a burning question you want to ask at this point in time? I definitely don't want to leave you out of conversation. Yes, the lady in the red.
Good morning, everybody. My name is Titi Layo Scott. I'm a technology and innovation lawyer. I've listened to the panel and the problems that have been discussed, but I want to highlight a particular problem, which is the fact that some of these solutions are actually not known. I visited the exhibition stand yesterday and I had some solutions that I would actually need for my own business, but I had never heard about them before. How do we solve that challenge of getting the products to the consumers? I know that putting up billboards like the CUDA and all that may be expensive, but there has to be some way to get people to know some of these solutions and be able to use them. So that's my own contribution. Thank you.
Thank you. So your question is around how is there a way for us to extend reach so that the actual audience gets knowledge of the solutions? Yeah. So I don't know if there's anyone in particular that wants to take a stab at it. Mr. Ajibade, please.
Ajibade, go for it. You're a partnership person.
Thank you very much. So yes, it's a big problem. Most times you have to source for information yourself, but some organizations like FSI, that's I spoke earlier on online, they are doing things around collating fintechs and fintech-led organization. You remember that, recall that it's not everybody that is in financial technology. There is edutech, insurtech, tech, and every tech that is available like that. So try to create a compendium of database of people innovators that are trying to digitize various journey across the various verticals that we have. Like you said, there's no particularly known avenue to go and find out where this person is. But you and I, we are hustling. We are trying to push our solutions out there. It's a tough one, but we'll get there. If you listen to Akim very well, it took us back 20 years memory lane of how terrible it was then. The fintech that we celebrate today, some people were trying hard to build it that time, but today we are happy and we are here today. With the newly signed fintech, startup bill of Startup Act that was signed last week, if we all jointly come together and see how we can actualize that bill. At least we'll force something good out of government. Thank you.
Thank you. Thank you.
Let me speak to some of the earlier issues around some centralized data, how we cannot coordinate ourselves, and speak to our fintechs who are into credit. Today, the fintechs who are into credit are not mandated to submit their data by regulation to the credit bureau, unlike the banks. Meanwhile, the new generations of customers that are being served by these fintechs are those who have been traditionally excluded by banks. So it implies that these new fintechs who are into lending, they are building a new set of data on customers whose data, whose credit story, credit history, no one had known until now. Unfortunately, they are keeping this valuable knowledge to themselves. The total ecosystem will benefit if this new generation of data is also put into the credit bureau system so that we can all collectively as an ecosystem manage down the cost of risk. Because if I do not know, the same customer is going to different A, B, C fintech, and each of them will treat the customer in isolation. Meanwhile, there will have been some data of credit history somewhere that could have helped to assess the risk much better, and also price the risk much better, and even give a better interest rate that's affordable, for example, and get many more people to access credit. So these are some of the things that we are here that we can all do together for the benefit of impact of the fintech community. The other thing I think it's important to throw it in now is on digital identity. As of today, there are 90 million, according to NIMC, some programs, so recently, there are 90 million Nigerians today who are now registered on the National National Identity Management Register. This is a big news. At the rate at which NIN has grown over the last 4 years, it implies that we will have 100 million Nigerians with formal digital identity by 2023. It has big implications for us in fintech. What it means is that for the first time, we have the possibility of having 100 million Nigerians with formal identity and formal bank account or wallet. That changes a lot of things. It expands the market, it expands reach, it expands inclusion. It makes credit, lending, payment, all sorts of services to scale in different dimensions. Because a lot of us are listening online, I want to throw a challenge to all of us. What are we going to do as patriotic Nigerians to convert 100 million Nigerians with digital identity to formal bank accounts by 2023 and change radically the pool, depth, and reach of the fintech ecosystem in Nigeria? If we solve that, we'll also be addressing the issue of valuation for valuation's sake or valuation for social impact, where every Nigerian can feel that fintech has actually touched them and we've included them in the opportunities of the former financial system. Thank you.
Thank you. Very, very valid points. Yeah. So I think you've made a very valid point, and I think nothing screams scale as well as that number, 100 million by 2023. And so the question, what I'm hearing is that digital identity is like, it has a leg up being solved because we're seeing the work. NIN, we're seeing everybody, like your phone, you can't call certain people unless you get registered for INN. We see the work being there on the digital identity front. Now, the other bit of data that the work is now not being done as fast is data on credit behavior, and especially data on credit behavior that fintechs have, that fintechs are keeping. And so the question is, we're clapping for the 100 million that we're going to get, but if we don't have the right data on them, or we don't have the habit of collecting and sharing data, how valuable can they be to us? Because at the end, for a lender, your money, you make money by being assured that you can get money back. You don't make money by sharing money. And so the question is, there's something that's clear here. There's a hesitance to share data. Because we're all aware we do need it, but there's a hesitance to share data. And so can we talk a bit about, so before we go ahead and talk a bit about how can we solve for that hesitance that people naturally have? How can we deal with the hesitance? I do want to turn it to see if Aitwa had any input at this point in time.
Yeah, thank you very much. So concerning data, I agree, the two speakers that have spoken, Mr. Olu and Mr. Ajibade, that there's a need to harness the existing data that we currently have. However, beyond harnessing the existing data that we have, we also need to do the dirty work. So what do I mean by that? There's this African Development Bank story. They were looking at how to address the gender gap, financial inclusion gender gap across Africa. And a case in point is the Zambia story. 80% of farm holders were female, contributing to food, contributing to food supply in Zambia. However, they were not financially included. What Pula did in providing agricultural insurance was to get closer to them to understand their pain points. So they put all of that data together as primary research, and they discovered, and they tied that to the pain points of these people. They discovered that during some harsh weather conditions, maybe flooding and all of that, their crops are eroded. And so they created a solution, a product to solve that problem. Somebody in the audience talked about awareness. I agree with her absolutely. There's a lower level of awareness on our products that are best suited for these people. So in harnessing the existing data, yes, it's important. The telco data, I think, is very, very important for the ecosystem to grow. But I also dare say that I think that some institutions have a competitive edge with data, and that might be one of the reasons why they may not be willing to share what they have. If you even look at the ecosystem, I may be wrong, but my opinion is this: when any service is launched, right, maybe from the central bank, for instance, or even from the Nigerian bank settlement system needs, the first point of call are the traditional banks. And then they forget that they are fintechs, and they also, maybe not deliberately, right? Maybe just to test it out first, that they are fintechs, and they're even microfinance institutions. I'm not an advocate for everyone in the ecosystem who has a great idea, or who is doing stuff, or who is solving a problem to go and get a license. But I think that they may even have some information about certain markets. The transportation sector, for instance, Lagos alone, look at the value chain in Lagos, the transportation sector. That's again, a number of startups trying to do stuff, how to digitize that. But that data is sitting somewhere and maybe sitting with governments. How do we harness all of that? Some persons must be championed, right, with this tax to say, okay, how can we harness this data? If you look at BVN data, 50 million. And I also do not think that everybody needs to have a bank account. I think they need to have a financial account, a transactional account. What I hear from people at the bottom of the pyramid is, oh, when you pay 2,000 in my account, when you pay 1,000 in my account, the bank deducts 50 naira. That 50 naira is stamp duty. To you and I, it may not matter, but it matters to those people because every naira they have, every kobo they have, counts. So I think that when we look at financial inclusion broadly again, we should be looking at accounts that CBN can recognize. Wallets can have BVN on them. So beyond the existing data right now that we are not harnessing the benefits, which will likely speak to those who are unbanked, we have to also be thinking of data that speaks to those who are not unbanked or those that are underserved, like the telco data, for instance. How do we harness the opportunity there? And how do we create products to solve their problems? Thank you.
Thank you, Aitwa. Thank you for that contribution. So basically we're not looking at how do we extend you know, the amount of data footprint we have to the unbanked. So I want to turn again back to the question on the hesitance. How do we solve for the hesitance to share data? So once I get feedback from even the panelists, I'd love to open it up for some of the audience. If you have thoughts around how we can practically overcome this hesitance within the fintech ecosystem to share data so that data is available for good use.
Maybe before then, if you don't mind, the questions you'd asked.
Yeah.
How do we get people to be aware of what the fintech innovations are? Because you were speaking about revenue and profitability. If you're creating product for product's sake and no one is buying, you're not going to make any money. And that's one of the things I think Fintech Nigeria exists for. And I think we should give them a big hand for that, Fintech Nigeria Association. And they're creating a platform that's making it cheaper for every person who identifies with them to have a broader access to market. So you have an event like this, you've got a platform where they're just pushing you even beyond Nigeria, and quite a number of events happen. So the cost, if you're going to advertise yourself, is just been crashed. Part of the marketing cost we talked about, because that's just cheaper. You get to be a member of the association. They're having virtual events. They're pushing your logos, your products. They have it everywhere. And that's one of the things that collaboration does. And Fintech Nigeria is just less than 5 years, right? And so we see this as a very viable platform. We identify with this very fully. And so the young guys, we need to go after them. Like I said, this is going to crash your cost in many ways. You're going to have mentoring. You're going to have lower cost of marketing. You're going to have exposure. And then you're going to have access to secured funding beyond Nigeria. And that's one of the things that we're going to continue to do. Thank you.
Yeah, I think Fintech Nigeria deserves another round of applause. I mean, that's a lot. That's a whole lot. It's not being. Okay.
Yeah, I think beyond you know, what Jeremy has mentioned, the opportunity to collaborate as well. I think one of the factors with regards to the sharing of data is trust, right? The market is very competitive. And you know, the drive to scale and to acquire merchants, it's a very tough challenge at the moment. So there's this distrust amongst merchants in terms of, oh, if I do collaborate, what does that mean in terms of sharing my customer data, et cetera, et cetera. But the reality is it has to happen, right? There will be some consolidation in the market over time. With regards to data, we do have firms such as NIBS, Nigeria Interbank Settlement System. They actually are, you know, partially owned by government, but also by the major banks in Nigeria. They collate information and they have dashboards where they share reports. However, as Jeremy mentioned again, this information needs to be distilled down to a more granular level where we can use it for value-based product creation. So it does exist at the moment, and also leveraging B2C fintechs and their virtual wallets systems, of which Woven Finance provides, by the way, from a B2B platform perspective. You know, those B2Cs can go out into the market, into the unbanked market. They can find, you know, innovative ways to tap into them, bring them into the financial realm, get their information, and over time convert that into, you know, convert them into the core financial system. But, you know, the boundaries or the boundaries to getting bank accounts initially are the fact that, you know, KYC, et cetera, which is why things like virtual accounts, wallets are there to simplify, bringing them in, simplify financial inclusion. So it's a journey. And I think we're definitely, you know, along the right path with the Nigerian Startup Bill, NIBS, and then more collaborative sessions such as, you know, Nigerian Fintech.
Yeah, I think one of the things that you shared that I think I resonate with is even when the data is available, like when you reference names, sometimes it can be so aggregated, you're not able to drill down to what you need.
Yeah, it's available right now. So there's a charge for fintechs actually to take that data, collaborate, be sponsored, and drill down so that that can be distilled and used for value creation and value-based product creation.
Absolutely. Thanks, Kafo.
If I could add something quickly, because the clock is running. One other challenge we should not mention to speak to is the challenge of governance and compliance. The chart presented by Akeem about how the industry has grown big time, over 20 years. One of the messages to us in the fintech community, which we should all collectively heed, is that the scale of fintech today is now big. Some of us in fintech are moving payment volumes that are bigger than some banks. And what we are being told is that the standards of governance and compliance expected of us can no longer be the small startup of a few years ago that is just a small business. And we have to grow up and behave in terms of governance, board, compliance, like even though we are young, adopt very quickly some of the mature practices of compliance, of governance, of good board practices. Is one of the challenge. Because we are young, we tend to say, what do they mean? We are not used to it because that's not where we come from. But we have to, because we are now big enough. To whom much is given, much is expected. How do you say it? To whom much is given, much is expected. Size comes with certain levels of obligations that we have to grow up to, given the size of our performance in the ecosystem today, in terms of governance and compliance. I think one of the things we got to put in the bucket are some of the things to address in terms of the challenges of the fintech ecosystem in Nigeria. Thank you.
So the point here being, I'll summarize and give it. So the point here being, basically fintechs need to grow up, right? Now, as a startup, your first thought in your mind is speed. How can I run as fast as possible, grow as big as possible? Which is great because it's given us a valuation that Akeem dramatized for us, visualized for us. But then the counter side of that is putting those controls in place so that you're actually creating a company that's worthy to be trusted with people's funds.
Exactly.
Yeah.
And engage those regulatory engagement with an open mind. Because we need to engage regulatory engagement with an open mind. As a Steve Covey principle, so as of highly effective people, seek first to understand before being understood. It applies to regulation. Seek first to understand where the regulator is coming from before the regulator will understand you, because the regulator tends to see a bigger picture than your business. Because we are young, we tend not to see, we only see our space. So these are some of the challenges of growing up, and we have to grow very quickly, all of us, given the size of our businesses today.
Thank you.
So from my side, it will be around beyond the data that you collate. I know organizations or fintechs, they find it difficult to have reported fraud cases because you don't want people to stigmatize you or label your platform as being porous. But in reality, we need to come up with, like Kofo said, we need to have a database where we report cases of fraud so that we can identify that guy who is feeling smart, hopping from one application solution to another and defrauding people up and down. We know his BVN, we know his phone number. At CB level, we are trying to advocate, or one of the advocacy we are passing across is to increase the measures applicable to fraudsters, which beyond bastardizing the person's BVN, that will not allow you to have access to financial solutions all through, because without your BVN, there's nothing you can do. We are extending it to NIN. And you know, when your NIN is bastardized, that means there's no phone number for you. That means there's no international passport for you. So you can't even leave Nigeria. You are more like in a cell. So beyond the data, we need to increase the measures applicable for fraud or identify frauds and the fraudster so that they can keep away from this our industry. Otherwise, they will ruin all the good things that we are trying to achieve.
Absolutely. And it all goes back to data to tell us who's a good guy and who's a bad guy.
Absolutely.
Yeah, absolutely.
I think on the last note on that, Olu had hinted on regulation. Yeah, regulation. And that's something we shouldn't leave here without talking about. Many times we think regulation is punitive, but says, if you want to run fast, be sure you're not running fast to remain as a child. You want to grow, because we started this conversation about scaling. With scaling your business comes certain responsibilities. You assume some criticality within the ecosystem. And that's why you will hear about some banks and they call them too big to fail, because that's systemic implications. Today, you now have some fintechs. I mean, you can't afford for them to go now. And that's why they need to also extend their footprints into other fintechs within the ecosystem. And so there must necessarily be an interface, an active interface, which I'll throw it back to Fintech Nigeria. There must be a platform for constant engagement with regulators, and that will be the central bank who continues to open up. That will be the SEC. A number of people just took a backseat when it came to digital assets and digital currency because we never understood that. If we're not understanding those things, building opportunities around them are going to be challenged, operating those opportunities are going to be challenged, and then it's going to have implication on the kind of things we can do in this environment. And so, issue of regulation, be aware of those regulations, and thankfully many of them are being put together. I know some members of Fintech Nigeria, some law firms who are doing that. So the starting point is you want to start a fintech. What are the regulatory guidelines? And there's just a number of them broken down for you to understand. The next thing then will be understanding where the regulator is coming from. You cannot regulate innovation, is what we say many times, but the regulator needs to understand the innovation and how it will not challenge the environment it regulates. So that interface must constantly happen. When e-Naira came, a lot of people just took a backseat. What position did we take to say, well, you can't stop this. What can you do with it? And so we were able to liberalize that for Nigeria today happens to be the first country on the African continent where you've got the CBDC. We've been part of that. You take it to the next level of economic advocacy. If anybody wants to implement CBDC in Africa today, Nigeria is a go-to place. Who are the people to get it done? The fintechs. And so these opportunities just continue to be there. So I don't think we're limited by opportunities. I don't think we're limited by ability to transform these opportunities to revenue and profit. We need to do the necessary things and take responsibility for ourselves.
Thank you so much. Thank you so much for that. I think the summary of that is basically beyond even events like this where fintechs connect with fintechs, investors connect with fintechs, we need connections with regulators that are constant and not one-time basis. I think that's valuable. Well, the time is up. I have to forego my standing ovation because I ran out of time. But nonetheless, thank you so much to Mr. Ejibade, Mr. Komu, Mr. Rolo, and also as well, Mr. Tanda for an awesome, wonderful session. Thank you.
Pictures, please. And I'll ask the president and the COO, the vice president, and any member of the board of trustees of Fintech NGR to please come join them for pictures. After they take the pictures alone, please, I'd like you to come to the middle, take pictures. Thank you. Thank you very much. Now, something I noted, there was so much in that session that was focused on challenges in the fintech ecosystem. We heard the panelists talk about different challenges, including infrastructure, data, marketing, and so on and so forth. But for me, the major takeaway was something that Deremi said, which other panelists also echoed, talking about the need for collaboration. And in the famous words of Steve Jobs, he said, great things in business, Steve Jobs said, great things in business are never done by one person. They are done by a team of people. And for that reason, I think it's important. They already did that, but I think I'd like us to do it again, to appreciate this platform that has brought people in the fintech ecosystem together to brainstorm, to co-create solutions, to market their businesses. I think the Fintech NGR deserves another round of applause. And maybe we can do a standing ovation for Fintech NGR. Please, let's celebrate the Fintech NGR. for this platform for collaboration for all members of the FinTech ecosystem. Thank you. Thank you, ladies and gentlemen. And please remain on your feet. May I ask that we please remain on our feet, ladies and gentlemen. Please let's stand for a bit. We just want to make sure that we are fit. You know, standing ovations are good for two reasons. First, we appreciate our speakers and the people who are celebrating. But the second reason why standing ovations are laudable or are good is because they help us to stay fit. And we sit for a long time. So when you stand to celebrate someone, you're not just doing them a lot of good, you're doing yourself a lot of good because we've been sitting for over 50 minutes. So please let's just stand, stretch our legs, and give a handshake to somebody beside you. You could give the person a high five. You know, in local parlance, we call something chop knuckle. What it means is the fist bump. So please give somebody a fist bump, say hello, great to see you again. Just use the opportunity to stretch your hands, stretch your legs. A little bit of networking for about 2 minutes won't do us any harm. Let's network, meet one another. Thank you. And our virtual audience are not left out. In the chat feature or on the chat feature, please drop your location and share your learnings so far. Thank you. All right, please let's take our seat. Please let's take our seat, ladies and gentlemen. Please let's take our seat. Thank you. We're set to continue conversations. All right, it's now time to bring up the next speaker. Please let's take our seat. Thank you. Now, the next session is focused on learnings from Apec. And Apec is the Asia Pacific Economic Cooperation. Now, Apec has carried out a research that's focused on the role of FinTech, the role and opportunities for FinTech and RegTech. Now, this research has some key findings that are relevant for Africa. So there are a lot of key findings from the research that are relevant for Africa. And today we are very privileged to have the person who led this project in our midst physically. So ladies and gentlemen, join me as I welcome the Apec Research Project Lead and Digital Finance Advisor at the IFC, Andrew Davis, as he takes us through the learnings from Apec. A round of applause for Andrew Davis, please.
Thank you, and good morning, everyone. It's so great to be here. And in fact, this is my third time to attend Nigeria FinTech Week since 2017. I guess what really excites me, though, thank you for that, what really excites me is to see people getting together and physically coming together versus all the virtual events we've had over the last 2 to 3 years. So I want to take a few minutes today to walk you through a project that was undertaken last year, Apec, and I'll explain shortly who and what Apec is. But I think you'll find that as I work through the findings of this project, there's a lot of relevance and applicability for Africa. And that's why I'm presenting this to you today. So first of all, who and what is Apec? So Apec stands for the Asia Pacific Economic Cooperation. It's a body spanning 21 different economies, and it operates at an intergovernment level. Basically, those 21 economies represent 2.9 billion people and about 60% of global GDP. So looking at the map, it's basically countries that span the Pacific Ocean and includes countries such as Philippines, Indonesia, Mexico, in addition to large markets like United States, Australia, and so on. So in 2020, the Australian government agreed to fund a project for Apec, and I'll walk you through that project now. Go back. So the goal of the project, so before I talk about the goal, I guess what we saw is that during the pandemic, governments all around the world have been digitizing their services and delivering more online. But what we realized is that it was often done in a very rushed way. Government wasn't always considerate of the impact at a social level, the impact at a technology level, the impact in terms of government policy and planning. So this project really helped to identify all of those issues and bring them to the surface. So this project, the target audience is at regulators and policymakers across the Apec zone. And it was really looking at what's the opportunity that FinTech and RegTech can play to help deliver digital services in a more sustained way, specifically looking at 4 key pillars. And these are pillars that Apec had set as priorities. So for any economy that wanted to become digital, the view was that all of these 4 pillars needed to be addressed. And the 4 pillars there, as you can see, are regulatory and institutional reform and balance, consumer protection and law enforcement, a really important one, improving financial literacy skills and ensuring access to financial services. Can we go to the next slide? Thank you. So the project had 3 main stages. The first stage was to do a significant amount of research across those 21 Apec economies and to develop a concept paper. That concept paper was then used as the basis to conduct a series of workshops. And the workshops really were quite insightful. We had a lot of different central banks presenting on the different digital initiatives that they were taking. And there's one in particular that I'll share with you shortly. And then we could then produce a final report, and the final report had a whole series of recommendations. And in fact, at the end of my presentation, I've got a QR code that you can access if you want to download the final report. So, sorry, just to go back. So the workshops we ran generated a lot of insight. And actually what we had seen is that central banks in many countries around the world were taking proactive steps to look at things around increasing consumer confidence and trust, educating the population around the use of digital services, looking at the protection and privacy of data, and so on. So here's, I guess, a simple list of some great examples from all around the world where we've seen these regulators and central banks being very proactive. Because what they've realized is there's no point rolling out some kind of e-government initiative if the target audience and your population are not able to make use of that. So let me highlight just one of these examples, which is the one at the very top. And this is an example of what the central bank in the Philippines did in support of deploying digital services. So they adopted a program focused on financial education. Their view was that people perhaps who didn't have strong experience and knowledge around financial services, to get them to move online and adopt financial services, their hands needed to be held and they needed to be trained and guided on the benefits of that. So they put in place a framework which is all about partnering with different organizations to basically uplift the level of knowledge and understanding of financial services and therefore make it easier for people to move online. So they had a digital literacy program that had 4 pillars to the program. And the 4 pillars are around the knowledge of digital financial products and services, the ability to protect digital financial transactions from risks, raising awareness of risks in digital financial transactions, and then knowledge of consumer rights. And their view was that if they could address all of those 4 pillars, the result would be increased consumer confidence and therefore people being more willing to adopt some of these new e-government services. So they've rolled out a program. Now the Philippines is about 110 million people in terms of their population, and they've rolled out this digital literacy program. And so far it's reached 29 million people of their population. And they've done that through this partnership model. So the central bank has basically been the driver of this program and the facilitator, but they've not been the ones to execute and deliver. They realize that's not their area of expertise. So they've partnered with a whole bunch of different organizations. And as you can see here, They've targeted teachers, they've targeted public servants, they've thought about small businesses. They're trying to, I guess, reach into all corners of society and the population to benefit from this program. Oh, too far. So, in terms of the project itself, at the end, we had 13 recommendations covering a few different groups. And I just want to highlight some of the project recommendations. So in the area of regulation, and just remember that this whole project was targeted at regulators and policymakers. So the view was that there needs to be a lot of collaboration between regulators at both a domestic and international level. It's not uncommon in any country that there's multiple regulators spanning different parts of the financial ecosystem. And in some cases, even those regulators from the same country don't seem to particularly coordinate between themselves or share information that well. So there's a distinct opportunity, but at the same time, as we've seen with the Philippines, there's lots of great case studies and there's lots of great successes that regulators need to become aware of and to share with each other. Another one is, which is recommendation number 3 here, is that our view is that regulators and policymakers need to create paths to market for innovators, whilst ensuring consumer protection is in place. So basically what that means is, our view is that regulators need to make it easier for new entrants to come to market to offer new products and services. I think in some instances, regulators have been barriers to entry of new entrants, but ultimately they need to create those pathways, and that was a key recommendation. In the innovation category, definitely in some markets, we're now seeing regulators funding innovation programs, and that's a really beneficial strategy to take. In some instances, banks and other organizations are reluctant to work with fintechs and startups, but as soon as a regulator perhaps initiates some kind of program or funds an innovation activity, that signals to the market that it's a good thing to do, to be working with startups and fintechs. In terms of some of the other recommendations, so in the section of collaboration, we're starting to see that there are these kind of special interest groups that have been formed. You know, regulators are very large in terms of their organizational structure, but more and more regulators maybe have fintech departments. And so now we're starting to see a fintech department of one regulator, perhaps for having a WhatsApp group with their peers, with other regulators. In the area of education, quite a few recommendations there. The first one there is about how regulators need to really promote a lot of education in the market and to help, I guess, define and articulate standards. So, you know, regulators, and we think that's a good role for regulators to play to help educate the market, and to do that obviously without commercial interest or commercial bias. And so in some markets, we do see regulators doing that quite heavily. And then the final recommendation, just to highlight, is that fintech and regtech have an important role to play in the digitization of an economy. They shouldn't be seen as something to shy away from. They shouldn't be seen as something to put up barriers against. They need to be embraced and accommodated into the strategy of having a digital economy. So just my last slide, if I can get to it, or my second last slide. So considerations for Africa, I think there's a lot of relevance if you look at the findings of the report. Clearly, there are regulators in Africa that are facing the same constraints and challenges and opportunities. But of course, you know, we need to make sure that services are rolled out at the right pace and that people aren't left behind. I think the main conclusion here, or two conclusions, that information sharing and collaboration of regulators is a good first step to take. And of course, to bear in mind that fintechs and regtechs do play an important role. So just to my last slide now, if I can. So I guess just a quick thank you for your time. There's the QR code if you want to download the report. I'm around for the rest of the day. Feel free to come and tap me on the shoulder if you want to discuss. Thank you so much, everyone.
So much, Andrew. Now, I'm not sure if we all heard what Andrew said at the beginning, but you know, I realized something. Andrew has been attending this conference from all the way from Australia, right? And he has attended for 3 consecutive times. Or he has attended at least 3 times. And I think he's deserving of a round of applause. To be interested in the fintech ecosystem in Africa, he's deserving of, maybe we can do a standing ovation, you know, to celebrate him so that he will come next year. Please, let's celebrate him louder. So that Andrew will come. Andrew, you're welcome. We love to keep seeing you. Thank you so much for making it out here. And thank you. I believe we should leave the QR code on the screen just for about 1 minute so that anyone that wants to, you know, just scan it. Using this QR code, you can get the full report. If you want to read much more about the report, please just scan the QR code so you get acquainted with the report. There's a lot of learnings. I mean, it was done by Apec, but it is very relevant for Africa. So please scan the QR code and just get a sense of what the full report contains. Once again, thank you so much, Andrew. Now, ladies and gentlemen, this conversation will be incomplete if we do not have regulators. The fintech space, and just as I said yesterday, is not complete without the regulators. They are such an important part of the ecosystem. And now to the next session, where I'm really delighted that the chief regulator is around, is represented in this next session. So this session is focused on eNaira, the enabler of the new phase of financial inclusion drive. And I'm happy, as I mentioned, that the chief regulator is around, is represented the Central Bank of Nigeria. And to take this session, I'd like to invite Fadele Adeolu, Assistant Director at the Central Bank of Nigeria. Please, a round of applause. Representing the Central Bank of Nigeria. After which we have Mujib Ishola, the Chief Technology Officer at System Specs. A round of applause for our speakers. You're welcome.
Good morning, everyone. Testing my speaker, my microphone. Okay, so I want to say congratulations to all of us, and especially to the Fintech Nigeria Association. I'm always proud to associate with you. You know I'm one of you anyway. So I want to say thank you to everyone who has been making this a very useful conversation. We're here to talk about eNaira, so I'll just go straight to the point. So we're talking about eNaira as a new enabler of financial inclusion. I sat in the crowd there. I've been listening to very interesting topics, so we are likely to be just repeating those key points because there's nothing new that has not been said. But I wanted to say that in the architecture, in the foundational design of the CBDC, I'm happy to tell you that fintech is actually a foundational requirement. I mean, innovation is part of the foundation of any CBDC, and eNaira has been designed to enable that innovation. And on that note, I think we can start the conversation. I just want to mention that as a regulator, we are all, I mean, We're having this conversation today because we all believe that technology and innovation has presented our generation a new opportunity to redesign